But we've got Karan Taurani joining in now as well. Karan, good morning. Great to have you with us here early on. You've written about this. We've spoken about this earlier. Now the Competition Commission sort of okaying the deal. What does it mean, prima facie, from a market perspective?
Hi, Prashant. Good morning. So I think this indeed is good news because CCI approvals generally take time, and this is coming because both these entities are very large in terms of size. They've got about 40% market share in the TV advertising segment. So I think we'll have to wait in terms of what channels have been shut down voluntarily. I think there are some reports mentioning that, if at all. But largely, I think net there was an issue with sports, wherein they command about more than 80% market share in sports. So hopefully that's not happened, and some streams and channels have been let go off. So I think it's a good thing for both these entities, RIL-Disney. I think competitive intensity will clearly go up. They'll have a commanding position both on the linear TV side and the digital side. They'll have about 33-34% market share on the digital side as well. And digital is the future for M&E, and clearly they have got the support of last mile, via Jio Fiber and Jio Mobile, which should lead to better scale on the business.
From a listed entity perspective, Karan, any implications straight away?
So from a listed entity standpoint, I think TV18 owns only about 6% in the merged co. So basis that you get a valuation of about 4,300 crores for this kind of 70,000 crores what they've paid in terms of total valuation. And if you look at TV18's market cap today, it's about 8,000 odd crores, which means that the balance business, which is the news business, is valued at about 4,000 crores as on today. Now, let's assume that there are synergies in the business and, efficiency-wise, profit-wise, growth-wise, things are better. And this valuation of 4,000 crores, which is today, moves up to maybe 6,000 crores on a forward basis. Even then, the news business is trading at fair valuation of 2,000 crores. So I think from an upside standpoint, fundamentally, we don't see any big upside rather from TV18 from here on, unless we see losses converging sharply, because you have to articulate the fact here that Jio Cinema is making losses, Hotstar is making losses. Both these platforms are making hefty losses, and they are going to come under this large mega entity, and that's primarily because of sports content. So if probably they scale up to subscription revenue, they start charging the the customer for the content if something really changes. Otherwise, we don't see any kind of a big upside.
Karan, hi, morning. That brings me to also implications for the entire ecosystem. And I know that your target price on Zee has been, I think, upwards of 200 for a while. We discussed this even when this settlement came in with Sony just a day back, right? Now, given the size and scale of this entity and the commanding power it has, when practically you want to watch any sport content, you'll have to be on these platforms, right? And the whole slate of entertainment, movies, etc. You've got two TV studios merging. So, given the size and scale, what would be the implications for Zee? I mean, or any of the other incumbents, but Zee because it's the immediate listed entity.
See, in terms of impact, definitely it's a negative impact for the overall M&E ecosystem, whether you call it the global OTT giants, whether you call it Zee or any other players which are there, right? So each one has got their own pros and cons. So in this case, you have got scale, you've got digital focus, you've got, monopolistic approach in the sports business. You can grow faster ahead of market. You can scale your digital business much better, but there's an issue in terms of profitability. So, Indian market is not kind of paying hefty money in terms of subscription revenue. So how will you actually, narrow down your losses? I think that's a concern. And somewhere I think valuations, will kind of always appear, high because of this issue. On the other hand, you've got players like Zee and maybe even Sun TV, who may not be able to scale up in a very big manner, who may not go, above industry averages, who may not gain market share. But I think these companies have got to the advantages that they're not present in the sports business. So they do make very healthy EBITDA margins. In the case of Zee specifically, if you look at the EBITDA margins, it has seen a sharp increase from 8-9% band towards a 12% kind of a band. And I think the management has guided for 18-20% margin improvement. So I think from a risk-reward standpoint, if margin execution continues, if things remain to be on track as per management guidance, valuations are very, very compelling today for Zee. So I think neutral like
Karan, you have a buy on Sun as well?
So we downgraded Sun to a reduce, to a target price of 860. We had a buy at about 595. The stock rallied by about 35-40%. So currently, I think valuations are already moved up, for Sun TV. Core broadcasting was at about 7 times P. Today, that's trading at about 13-14 times P.
All right. That's a a crisp view early on in the morning. Karan, thank you for joining us. Very helpful to put all of that in perspective. Thank you very much and have a good day.